Everybody is panicking about crypto already, and it's only going to get worse. I thought about making this video earlier on in the week, trying to warn you guys about what was to come in the crypto world, but I was just too tired. I've been working super hard. I'm shooting this video for a second time because I definitely want to get it out Friday morning. But the thing is, everybody is wrong about crypto and digital assets, and a lot of people are going to get wrecked. Here in a minute, I'm going to tell you how to actually trade these markets and not get obliterated, so stick around. But first, I want to explain to you why I started this channel. And that is because I genuinely want to help people. It's actually a ton of work. I have other things going on. I have multiple businesses that I'm trying to run. And I'm still at a regular W-2 job in a tech company. A huge part of the reason I started the channel is because over the last 10 years, I've been trading cryptocurrency. And in the last bull run, I made a ton of money. It was all very exciting. I bought a house, I bought a motorcycle, KTM 1190, it's pretty awesome. I went to celebrate after I sold and went and talked to all of my friends, and every single one of them had gotten wrecked in the crypto economy because I hadn't been sharing my ideas, I hadn't been sharing my trading strategies, and my macro outlook on the crypto environment. A lot of them had been lied to by media outlets, and a lot of them were taken advantage of by exchanges and just the entire world of cryptocurrency on the internet. This cycle, I'm already up in trading like 5x in this cycle, and it's probably going to be another 5x before we get to the end of it. But a lot of new people are going to start coming into the market right now. So this warning is for those people, and these trading strategies are for those people. See, I don't really have a lot of rich friends, and they couldn't afford to lose what they lost. I had one friend that lost $60,000 when an exchange went bankrupt. Maybe she will get it back someday, and maybe she won't. Another one of my friends was leverage trading Solana and lost $100,000, and he's completely out of the game now. He can't trade this cycle. I also had a friend who was holding Dogecoin or some nonsense, and the memes and the web kept telling him that Dogecoin was going to $1, and he kept listening to them regardless of the fundamentals, regardless of the macros, and he lost everything in Doge. I was just talking to someone recently who sold all of their Bitcoin because traditional media told him that hedge funds were selling Bitcoin into the presidential election, and he thought it was a good idea to sell his Bitcoin pre-presidential election just in case anything bad happened. Well, he's probably super upset that he did that now because Bitcoin just put in a record high. So here is where everybody is wrong about cryptocurrency, okay? Number one, the presidency has absolutely nothing to do with the price action of Bitcoin. Maybe like a 1% effect that the election of Donald Trump had on the price of Bitcoin, but not more than that. The technical analysis was all there calling for an upward move for Bitcoin, maybe to 80,000, probably to 80,000 in the next week. And we're in the middle of that run. And the macro environment is perfectly set up for inflationary moves. But people are saying that inflation is down. So, well, here comes the second thing that everybody is wrong about. Inflation is not down. CPI is down, but the CPI metric is a lie. People keep saying that the stock market is super hot and it must go down because the S&P 500 is up 31%, and it generally only goes up 10%. What they fundamentally don't understand is that this inflation metric put out by the Fed is constantly manipulated. It's not a true indicator of any kind because it's constantly changing. See, I have a theory that over the next 50 years, the S&P 500 is going to average a 20% return, whereas the last 50 years, the S&P 500 averaged a 10% return. People are still doing their financial math as if the economy didn't break in 2020. But it did. We are still pricing into the S&P 500 dollars that were printed in the couple of years following 2020. That's because of velocity. A lot of people might think they know what inflation is, but what they don't understand is that velocity is what actually causes prices to go up. See, in my opinion, inflation happens the second those additional dollars hit the market, but prices of things don't actually start to go up until people trade around those dollars and you see the movement of the dollars. That's when people realize that dollars are really easy to come by and they start raising their prices on their goods and services. That's the velocity metric. Now, the Fed was able to keep velocity very low by raising interest rates. The higher the interest rates, the less likely people are to spend and send the money around. But what they're not doing is actually fighting inflation. The inflation already happened. What they're fighting is velocity, and velocity causes consumer prices to go up. But you know what's not affected? The S&P 500. It's still pricing in inflationary monetary policy, from post 2020. No one is talking about the fact that money isn't losing its value currently, it's already lost it. But the rate at which we experience the loss of the dollar's value has gone up with velocity as interest rates come down. And they're going to continue. Nothing that the Fed does can change what was already done. The dollars were already printed, they already have gone out into existence, and the inflation is going to be priced in, I think, over the next 10, 20, maybe 30 years. Nothing that the Fed does now can stop what was already done post 2020. Now, they can screw around with it a little bit, and they will. They're going to raise interest rates in order to keep consumer prices down. That doesn't mean that the dollar isn't inflating. They're also going to raise interest rates. The thing is, they're also going to have to lower interest rates and take on additional debt in order to pay off their debt service. That has to happen. They will continue to screw with the dollar every 4 years, just as they've done in the past. So here's how we fix it. We have to get invested into alternative assets. Cryptocurrency is one of them, and it's an important one, but please be ultra careful when you get into this market. People on the internet are going to lie to you repeatedly. I have already seen tons of horrendous lies on YouTube and in the traditional media as well. Shit is going to get biblical. I just saw someone saying today, this time it's going to be different and Bitcoin might never go down. Newsflash, guys, Bitcoin always goes down. Whenever an asset has a parabolic upward movement, it always responds with a symmetrical downward movement following. They said it in 2011, they said it in 2017, they said it in 2021, and they're gonna say it this year, guys. It's not different. Don't buy Bitcoin when it's just had a ridiculous parabolic move to the upside. Now, what is a ridiculous parabolic move to the upside? Because I don't think we've actually had it yet. It's hard to wrap your head around when you're coming from the traditional finance world. But we're up about 5x over the last year, year and a half. And I think that Bitcoin is going to potentially move to the upside another 2x from here. So Bitcoin's currently trading around $75,000, $76,000. It's probably up by the time I post this. I think that's most likely going to go between $140,000 to $180,000. Those are the prices where it doesn't make sense to buy anymore. It makes sense to sell. Now, what other assets are you going to see? Solana is another really, really fantastic coin. Last I checked, it was at $200, but it is moving super hard and super fast. Guys, don't FOMO in to these coins. Dollar cost average as they go up. There's going to be plenty of gains to be had. Solana was at $200 last time I checked it. My price target for Solana is going to be between $500 and $1,000. So I'm going to dollar cost average up until the point that we hit those metrics. And when we hit into the $450, $500, $1,000 range, that's when I'm going to start dollar cost averaging out. The next coin I'm going to talk about is a much, much, much smaller coin. And so you should buy much, much, much less of it. However, it's worth noting that Near Protocol is a fantastic coin as well. Last time I checked the price, and again, it might be up dramatically from where I checked it last, it was trading around $4 and change. I think that it's a likely case for Near Protocol over the course of this bull market is going to be between $40 and $60. So I'm going to be dollar cost averaging in at $4. When it gets to 40 to 60 is when I'm going to start dollar cost averaging out, and that's going to depend on the price of Bitcoin. If Bitcoin is hitting my price targets for Bitcoin, that's also when I'm going to start dollar cost averaging out of these other coins, because a lot of them are following what Bitcoin does. So another token that is a for sure buy is SUI Protocol. That's SUI. The price last time I checked was at $1 and a bit, and I'm looking at between $10 and $15 for this coin. So we're looking at a 10x on this coin. Again, I would buy a small amount of it in your portfolio. Dollar cost average in over time as it's going up to those numbers, and when we hit $10, start to dollar cost average out. Just know, guys, that this is not financial advice. I'm not telling you that you should absolutely go and buy these coins. But if you do, this is the way to do it without getting wrecked in the market. In order to give you personalized advice, I would need to have a better view into your personal situation. If you like personal coaching, please shoot me an email at the email below. The last thing I'm going to leave you with is some rules for trading cryptocurrency in this economy. Number one is don't trade any amount that you can't afford to lose all of. The odds are, especially if you're a first timer in the crypto market, if you invest in this market more than what you are willing to lose, you will also potentially make terrible decisions when the volatility strikes, and it will. Rule number 2 is never, ever, ever borrow money to buy crypto, guys. Leverage is for losers. Several of my friends lost most of their money because they were trading on leverage. And what happens is you make a whole bunch of money right off the gate at the beginning, and then you only have to get one bad call before you lose everything. Trade the spot prices, guys, with money that you can afford to lose. Don't leverage. Rule number 3 is, for the love of God, get yourself a cold storage wallet. I wish that I had listened to these warnings when I first got into cryptocurrency. I was able to escape narrowly, but a bunch of my friends got completely hosed because exchanges go down. When the volatility goes nuts and shit gets biblical in the crypto world, exchanges regularly face liquidity issues. And if you have a bunch of coins sitting on a crypto exchange and it has liquidity issues, you are going to lose all your coins. So for the love of God, figure out what a cold storage wallet is. I like Ledger devices. Make sure that you don't buy your Ledger device on Amazon. Buy your Ledger directly from the Ledger website. Make sure that the package hasn't been tampered with at all before you put substantial amounts of money on that Ledger device. Guys, there are a ton of scams out there in crypto, and I'm just trying to tell you how to do it the right way. Number 4, guys, don't day trade in crypto. You can be pretty reasonably confident that if Bitcoin, let's say 10x over the course of a year, that you can capture maybe 5x of that. However, you're not going to be able to call exactly when Bitcoin is going to move 10% here or 10% there. So don't do the day trading thing, guys. Pay attention to the market, pay attention to the macros, trade on the macros, buy when it's incredibly low, dollar cost average in when it's incredibly low, because that lowers your average cost basis of getting in. And then dollar cost average out when it's roughly in the range that you think it's going to dump. Guys, there will be plenty of gains and losses to be had on this ride. You don't need to be in every single project, and you honestly shouldn't be researching every single project. Research the projects in the bear market when nobody's excited about them, and make your picks as to which ones are going to be successful and which ones you want to bet on. And then go ahead and put your money into those projects and ride it out for the rest of the thing. You're going to see coins go do 100x that you've never heard of before, and that's fine. There's no reason that you need to make money on every single coin, and you for sure won't if you're late to the party. By the time a coin goes up 100x and you're not in it and you don't know what it is, there's no use getting into it. It's too late. So guys, thank you for watching. If you want personalized advice on how to allocate your crypto portfolio, hit me up in the email below. We'll set up a remote call and I can take you through how to set up your portfolio. If you need help with just basic information like how to set up your ledger or things like that, I can help you with those things as well. I might come out with a video on that as well. But I just really want to help people so that they don't get wrecked in this crypto economy. Guys, thank you for watching and have a nice day.